We're about to get started, so hope everybody can go ahead and hear me. If you can't hear me, go ahead and throw me some ones in the chat. That way we can all be in sync. Let me know that you can hear me so we can go ahead and get started. Today's session is going to be pretty interesting, right? It's one of those sessions that many people ask. Hey Mauricio, how do you know where to enter? Hey Mauricio, what are your check marks? Hey Mauricio, this and so on. It's come to a time where now this session is going to talk about some of the important levels that I look at, right, which are points of interest. We've talked about some of the things as far as price action, candlestick patterns, and so on. And this topic right here is going to be about same scenario. It's going to be talking about points of interest, how to actually validate them, and so on. So like I said, we're going session through session, and we're going through lessons, right? What are those lessons talking about? What is it that you guys are learning? So that way you guys can go ahead and digest all the information and see from the favorite section and actually be able to apply them. Awesome. All right, great. So we're going to go ahead and get started. Before we do get started, first of all, I want to go ahead and thank every single one of you guys for jumping on the session today. Good morning, good afternoon, good night, wherever it is that you are currently in the world. I thank your guys' time for jumping on this session. Now, if you guys do have any questions, feel free to go ahead and put them down on the chat below. I do want to go ahead and focus on the lesson of today, which is going to be points of interest, how to identify a point of interest. Now, this is just to understand point of interest. It's not saying it's a verified point of interest, how to validate a point of interest. There are steps to that. For now, I want you guys to understand that a point of interest, what it is, and how to identify it. Okay, so I'm not really going to look at these charts. These are some of the setups that I am getting ready for you guys for if it happens next week, it happens next week. But these are some of the setups that I'm looking for to send to Steady Swift. So we have this one that's a 10-1, we have this one that's 18-1, and this one that's a 31-1 risk reward, right? So understand that it's not the quantity, but the quality of the trades, right? And then right now, I went ahead and talked with some of my team on understanding the full movement on what can be created right here, so that way you guys can go ahead and get some profits as well. I might go ahead and go over this towards the end of the session, but right now, primarily, I want to focus on the lesson, right? I want to show you guys the session, what it is that you're going to learn in this lesson today. I'm going to go ahead and use a blank chart. Right, I'm going to use a blank chart. As you guys can see, we have certain areas that are marked out, and this is exactly what I'm waiting for some movements to the upside. But I want to focus on today's lesson, points of interest. So what is that we're going to talk about? Point of interest, POI. Now, point of interest, there are several ways that you can see this, right? Many people know them as institutional points and so on. But I want you guys to know how is it that you can identify potential points of interest. So there's three type of things I look for when it comes to a point of interest. One is going to be an area of imbalance. One is going to be accumulation of price. And the next one is going to be our institutional candle. Okay, so going into that, we're going to go ahead and talk about first how it is to identify these. So there's several candles, right? The first one that we're going to be able to identify is going to be that institutional candle. So that institutional candle is when you see two candles are usually the same size, right? These two candles are usually the same size, and I'm going to show you guys the bearish standpoint. Okay, I'm going to show you guys the bearish one, and then we're going to go to the bullish one. So for right now, this is a bearish potential institutional candle. Now, how it is that you're going to be able to correlate this, let's go ahead and write this down first. Institutional candle. Okay, let me go ahead and mute my group so that way it is not bothering. Let's go ahead and do this real quick. One quick second. Sorry for the delay. Cancel, mute, banana. There you go. Awesome. So institutional candle. Now, When it comes to institutional candle, you can see that these two candles, okay, they're similarly usually the same amount of size, okay, which would be tweezer tops. We spoke about this on our study session about how to identify candle patterns, right? So this would be a tweezer top, or also it can be considered as a bearish Maribozu alongside with this candle, so rapid movements, right? So institutional candles are usually be within like tweezer tops or bearish Maribozus. So for you to identify, and they're always going to be spotted at the top of the market, right? When it comes to bearish institutional candle, you're going to usually see rapid moves come through from that institutional candle. So usually continuation, so on and so on. So that way this can continue on dropping. That is what institutional candle is more likely to be noticed as. I'm going to show you guys the 3 candles that I focus on, so that way you guys can go ahead and start locating these as homework and actually start practicing on identifying them. So going on to that is an institutional candle. They're usually same amount of size, and when it comes to the second candle, okay, in this case, this one was the second one. This one is more likely going to be usually a little bit larger than the first one because it's showing there's momentum, there's aggressiveness in the market, there's aggressive movement, aggressive push to the downside. Okay, now going over to the next candle, right? What is the next candle? For those that have played Tetris before, okay, this is where that little game pays off, right? You're going to be able to identify these much easier because this is accumulation of price. When it comes to accumulation of price is very well seen as those little Tetris boxes. Okay, for those that have played Tetris, this looks very similar to Tetris box, where you have market going up, this, and so on. So this is very similar to those Tetris box. For those that have played Tetris before or know what Tetris is, looks very, very similar. And this right here is how me identifying what is called a accumulation of price. Now, many people call them very different names, order blocks, and so on and so on. But I want you guys to understand that accumulation of price, why it is accumulation of price. So understand when this is being created, during this area, I'm going to go ahead and show you real quick. During this area right here, and this area right here, meaning that you have within this whole region right here, this whole middle size, what do you think is happening? There's a lot of price movement. Market going up, market going down, up, down, up, down. So what it's doing, it's accumulating price. It's accumulating orders, right? So therefore it's accumulating money. And when you see this accumulation of price, where you're going to usually look to, if it's a bullish, okay, accumulation of price, you're going to be looking for those areas in case if it comes back and taps into, you're going to be looking for those areas, you know, those half points or the beginning of those areas, which would be over here, right? If it's bearish, you'll be half point and below, and so on and so on. But right now, my main focus, you know, 98, 95% of the time is going to be the half point, okay? Why? Because this is an equilibrium point. This is the equal point. There's always a balance to everything, right? Right here, the balance to this is the equal point because more than likely there's orders buying right here, orders selling right here, buying, selling. So what's the half point? Right there. It's like a discount level, right? So it's like when you go to the store and you see 50% discount, you know, what's going to happen? More than likely you're going to take that, right? So what's going to happen when we look for that 50% accumulation of price? Tetris. Okay, remember it's like that little Tetris box. Going on to the next one. What is this next one? This next one is imbalance. Now when it comes to imbalance, how is it that you're going to be able to identify imbalance? What are the ways for you to identify this much easier? Right? How can you identify it rapidly? And what's the full understanding of imbalance? So for those that may not know, imbalance is very, very similar to gaps. So as you can see, we're able to identify what gaps are, right? We're able to see that the market was going up. Let me go ahead and put some color on this, and then, you know, continue going up, and so on and so on. Well, we would be able to identify that there is a gap right here, right? There is a gap. Let me go ahead and finish this off right here. Let me put some wicks in here to make it a little bit more realistic, and just so that way you can go ahead and practice a little bit more. So within this time right here, there's a gap. gap in price. So this whole area, that's a gap, right? If we didn't have this wick, well, the gap would be bigger. The gap would be all the way over here. But those wicks help us identify how big is the gap, because price came and filled those areas. So the same scenario, 90 to 80% of the time, this is going to be fulfilled. So what's going to happen 90 to 80% of the time, we're going to have those bearish movements come into those gaps. So when a gap is fulfilled, we can see market come over here. This can probably come in right here. And we understand that when price does that, it comes down and then goes up, what ended up happening? This wick fulfilled this gap. Therefore, there's no more gap. There's no more gap, right? This gap was fulfilled. Same scenario over here. So over here, in this area, this would be called imbalance. Now, how do you identify imbalance? The area you identify imbalance is also by understanding what gap is. But this is going to be a gap in price, right? A gap in buying pressure to selling pressure. So I'm going to go ahead and show you guys real quick. I'm going to go ahead and show you guys, there's those wicks. So to make it a little bit more realistic, how is it to identify these gaps? So as you may see, there's a gap in price right here. What is that gap in price? As you can see, there's a gap right here. And why is that gap? Because there's only buying pressure. When there is only buying pressure, okay, that means that there is also known as false algorithm. There's a lot of buying pressures, so there's no fulfillment of the seller side. So that is why we call this an imbalance zone. Why? Because there is no balance in the market. So this is going to be our imbalance. This area right over here. This is our imbalance. So meaning, if we had our next candle came bearish, right? This next candle was bearish. And let's say it just finished off right there. That means that this imbalance zone is now right here. Let's say the bearish candle came all the way down over here and then came back up. Therefore, there's no more imbalance. But what does imbalance work for? Imbalance helps us identify and help us understand that market is more than likely to reverse into these areas of imbalance. It acts as a magnet, okay? So understand that acts as a magnet. What else acts as a magnet? All these three, okay? These three that I just mentioned, this one, and this one, act as magnets. Our institutional candle, our accumulation of price, and our imbalance as like magnets, as well as our gaps. All these act as magnets for the market to come back into and have those retracements. So you'll see market, let's say taking consideration the institutional candle, market comes down, okay, it is more than likely to come back into that institutional candle, retrace for it to continue going down. Next scenario, if we see market going up from this accumulation of price, more than likely to come back down to that 50% level of that accumulation price to continue on going up, doing its retracement. Next scenario, imbalance zone, keeps pushing up, keep pushing up, keep pushing up. Where's it going to retrace to? More than likely, you're going to look for that imbalance zone that we mentioned for it to then either be stagnant, look for some type of movement down or up. Okay, same scenario with our gap. What's going to happen? Market goes up and looks to fulfill that gap to then continue going up or staying stagnant and then do another move to the downside. So it is important to understand how these areas correlate to our understanding. Okay, understanding points of interest is very important. Now, this is just understanding what it is. That's not taking consideration how to apply it, how to verify it. Because right now, we were able to understand what is an institutional candle or how to identify it, what is accumulation of price or how to identify it, what is imbalance zone or how to identify it. This right here, this zone, this is the imbalance zone. Okay, and that is why we look for 50% because we do not know if it's only going to go to half or to the very end. But we rather catch the 50% because it's more than likely going to be half of all the overall move, half of this overall movement right here. And that is why we decide to catch that 50%. So when it comes to this right here, what's going to happen is that we're going to be looking for these type of price action. Okay, we're going to be looking for these type of candle variations because they're very, very useful for us when we go ahead and apply them in the market itself. What is the difference between institutional candle and engulfing candle? So engulfing candle, you can find that anywhere in the market. Institutional candle, you're more than likely going to find these at the very top of the market or at the very bottom of the market. And these institutional candles usually come from market creating previous liquidity, which is one of the other sessions that we'll be doing. Okay, so when it comes to these sessions, we're going step by step when it comes to lessons, understanding the candles, then understanding the liquidity, then understanding how to identify a institutional candle, valid institutional candle to a invalid institutional candle, and so on and so on. Well, that's a good question. How to identify between institutional candle and engulfing candle. So one thing I can go ahead and tell you real quick is, engulfing candles, they can be, we can see a market going down. Engulfing candle can happen right here. Institutional candles are only going to happen at the top or at the very, very bottom, one or the other. Now there's a difference from just having institutional candles to understanding how to validate institutional candle. Okay, so these are the type of candles I look for. These are the points of interest that you will hear me say so much. Point of interest, so on and so on. And so is the inverse standpoint. If we go ahead and switch these over, what's going to happen? Now our institutional candles have shifted. Okay, this is still institutional candle, accumulation of price, accumulation of price. As you can see, the accumulation of price stays the same. We look for the middle point. For our imbalance zone, we look for the middle point. Institutional candle, in this case, now we're going to be looking for market to potentially retrace into this area, right? So we're always going to be looking for the best scenarios, and this is exactly how it's going to look if we go ahead and inverse it. So in this case, we'd be bearish. Let me go ahead and put these red so that way it can be a lot clearer. So I do want you guys to have full understanding and be able to mark them out exactly how they should be on the charts. So this would be a red candle. This one would be our green candle, which is our bullish candle. Then over here, since we are overall bearish, what's happening is that there's only bearish momentum and there's no buying momentum. So that is creating our imbalance from a bearish standpoint because there's only bearish momentum, so there's imbalance right here. There's no buying pressure. So right here we have our institutional candle, and we usually look for the start of the institutional candle or half of the institutional candle. We're going to talk more about these later on in the future and how I validate them to understand how to know what time frame to look at them and so on and so on. Do you find those higher time frames only? No. You find these in any time frame. Depends on what type of trader it is that you are, and how long you want to maintain a trade for. So I'll talk towards the end of the session. I'll break down real quickly GBP CAD and show you guys an institutional candle and kind of show you guys how I'm correlating all of this right here. I talked about institutional candle. I talked about accumulation of price and imbalance zone. Okay, so now that you're able to understand what all of these are, I'm going to show you guys how to put all these in place, okay, how to actually identify them in the market. So I'm going to go ahead and delete these, and we're going to talk a little bit about institutional candles and so on and so on. So I'm going to go to the H4 time frame. It's going to be a little bit easier when it comes to the H4 time frame for you to identify. Now, as you can see, when it comes to institutional candles, you always want to find them at the top. So right here, we have a potential point of interest. This point of interest, what is this? It looks like it's a potential institutional candle. As you can see, what ended up happening, we have this candle, okay, now both candles have volume, okay, they have volume. So this candle has very good bullish volume, and the second one, fast, rapid move to the downside. Helps us understand that this is a potential institutional candle, and that's what I want to pay attention to. This is a potential institutional candle, and that's what I want to pay attention to. Now, when it goes to this, okay, this is a potential institutional candle. Now, later on in the future, we're going to talk about liquidity to identify these liquidity points and just be able to know that's more verified institutional candle. But for now, let's go ahead and break this down. So we have that institutional candle. Now I want to go ahead and look for any other points where the market can go down into. Now understand that imbalance zones, remember I talked about the market going to those imbalance zones and either staying stagnant within that area or taking a decision within going up or going down. Those imbalance zones are going to act as magnets. So this right here was imbalance. We had imbalance right here, so we go ahead and cross this over to the right. You can see how market came into that imbalance zone, filled it up, and then started struggling right here in the same area of that imbalance. So now I want to look a little bit further. These imbalance zones are targets for me to understand that market can more than likely go and fulfill those areas. This right here where we're identifying imbalance. Okay. We're identifying imbalance. Right here, we can see accumulation of price. Now, accumulation of price comes in a different variety of candles. Now, there's that section of accumulation of price has already been talked through and studied. So you can go into the study platform, go on to favorite sessions, and then you'll be able to understand how to break down accumulation of price and how to identify the differences. So this is accumulation of price. I always look for the half point as well. So now what I did right now, I set myself targets. I have imbalance. This is a potential target, and I have what? Accumulation of price. So those are areas of the market that I'm gonna go ahead and look for: imbalance and accumulation of price for market to go into. Now over here, I have institutional candle. So I have two targets to the bottom and one target to the top. Now another thing that helps me understand where is market going to direct itself to is liquidity. So I can see that there's liquidity down over here, and also, as you can see right here, looks like there is an institutional candle. They're both pretty much the same size, and they're at the very bottom. Now, there's more to this. It's not just knowing that they're both the same size and they're at the bottom. There's usually liquidity to the left. Right here on the 15-minute time frame, we go to, let's see if we can go to 15-minute real quick, just to show you guys real quick. 15-minute time frame, you see liquidity. There's liquidity over here. All of this is liquidity. And right here you have that institutional candle that takes out liquidity and has it instant move to the upside. So on the 4-hour time frame, I was able to identify that that was happening right here. So you have your liquidity, institutional candle. Those are areas in the market that are going to tend to come down into. So now what the market did, came down and created more potential liquidity. Right here, took this one out. This is no longer valid. So what I would like to see is for the market to come up where? One, has to come up. I don't want to say has to. I would like for it to come up and take those equal highs out, because I know there's liquidity up there standing that's taking all that they want to take that money. And where is my institutional candle? Right here. That's an area that I'm looking to potentially sell into. And as you can see, I was able to break this down by finding my institutional candle, my accumulation and imbalance. These three can act the same. You can find the accumulation of price over here and base yourself off accumulation of price. Right now, what I'm basing myself off is institutional candle, liquidity zones, and other points of interest to tell me where the market can direct itself into. So it's really important to understand where is the market going to and how is it that you can go ahead and understand the direction of it. So for now, I'm looking for the market to retrace up over here and then look for that selling opportunity. Now that retracement is about 260 pip retracement, and I do see this potentially retracing up over there. And this can be something I can potentially send over to Steady Swift on later on today. London session might be something I send out to the Steady platform, but my main priority is the selling standpoint, because this is going to be a phenomenal sell point for us to go ahead and capitalize when it comes to this trade itself. This is the main pair that I'm looking at so far. So I want you guys to see, how was it that I was able to break this down very rapidly? By identifying points of interest. When you're able to identify these points of interest, it's going to be much faster and much easier for you to identify what can you do within the market. Okay, so I showed you guys point of institutional candle, accumulation, and imbalance zone. Now over here, real quick, I'm going to go ahead and delete this. And we're going to go ahead and look for another institutional candle right here. As you can see, these two candles have volume, and this second candle surpasses the first one with a lot of volume and continues on having that move to the downside. Confirming, I don't want to say confirming, but validating this is institutional candle. Okay, I don't want to say validating. This is validating that it's a potential higher probability of institutional candle. Once you're able to identify this, is by what? By finding liquidity, and that's what we found right here. Then, with that knowing, we are now able to validate this is institutional candle for us to take that in potential consideration for selling opportunities for the 50%, meaning that your entry could have been right here, movement up a little bit, and then continue falling down. Okay, that's on the H4 time frame. If you go to lower time frames like M15, M5, M1, your entry could have been a little bit more precise as far as up over here. But that's an institutional candle. Okay, now as you can see, you have imbalance right here. Now imbalance act as magnets, like I mentioned. Now what's going to happen? You can see market coming up and it's going to try to fulfill that imbalance. You can see market comes up, fulfills. Comes up, finally fulfills. So that's why I take imbalance zone as targets. It helps us identify those areas. Why wouldn't it go down to your accumulation candle and imbalance at the bottom before your imbalance at the top? Where are you? Why won't it go down to your accumulation candle? Are you talking about over here? When I was over here? You're talking about when I was over here. I already went way past it. But I'm looking for an institutional candle. I'll have to talk that towards the end, okay? Because I don't want to get sidetracked as far as the lesson. So, like I was saying, this right here are imbalance zones, and these imbalance zones are areas for you to go ahead and target as potential take profits, partials, or just overall look at the market and see what's happening. Okay, now what ended up happening, you can see market created again. I'm gonna mark all this down so that way you guys can see imbalance. Okay, institutional candle. And we'll wait up. Let's see to the left. What is there? We have accumulation of price. Meaning that this is the target to downside. Okay, so right now we can see market created institutional candle, come down, creates imbalance, keeps going down. So we can see market started going up to bullish scenario to fulfill this imbalance. This imbalance is going to help us potentially create more liquidity and then take over to our institutional candle to then later on come down from our entry to our potential accumulation zone. So it comes up, there we go, takes care of our imbalance zone, comes to our institutional candle for that potential entry, and then we're looking for it to come down, right? This is the last zone that we're looking for it to go into. But understand that this is what our take profit zone that we're looking for in the future. Okay, this is our take profit zone that we're looking for the future. And that's why you analyze again. Okay, what happened now over here? Is there any other more spaces for you to take in consideration? Yes, there's this liquidity right here. There's institutional account over here. So it makes it a lot easier for me to go ahead and find more movements, because you can see the market did exactly the same thing over here. What did it do? Imbalance. What is the market trying to do? It's trying to go ahead and fulfill that imbalance, then go through that liquidity into our point of interest. Same thing it did over here. It did institutional candle, imbalance, comes up, takes out our imbalance, creates liquidity to then go to our institutional candle. Institutional candle creates liquidity, imbalance, comes to our imbalance zone to then create liquidity, to break through that liquidity and then come to the imbalance zone and then finish down. So rinse and repeat. Rinse and repeat. Do you use the imbalance zone for entries as well? You can use the imbalance zone as entries, but to be honest, I don't use them as entries. I could, and the only way I would use them for entries would be if I go ahead and put an alert. Only if I put an alert, I would do entries, because I would have to go ahead and go in smaller time frame to identify that potential entry. Okay, do you usually look for a pinpoint? Yes. So I do. Do you usually look for a point of interest within your point of interest? Yes. It looks like you've more than likely been on some of the other sessions that I've been. If you aren't steady, you've been able to go ahead and more than likely see that. And that's gonna be one of the topics I'm gonna go more in depth later on in the future, as far as looking at point of interest within your point of interest, so on and so on, which is gonna be very, very interesting. So that way you can go to lower time frames. Okay, that's after we go through all the distributions, schematics, and so on and so on. So for now, you can see we have accumulation zone, right? That's target. Next target, imbalance zone. There we got it. So now we're preparing ourselves for future moves in the market, right? We have this imbalance zone. We have the accumulation. We have over here, as we can see, a new institutional candle. And we have over here, as we can see, a new imbalance zone. So it repeats itself over and over and over. I would like for you guys to go ahead and practice on finding these points of interest and back testing them and seeing how it is that they work. Do you believe? Do you think accumulation is formed on GBP CAD? Yes. Does this institutional candle create the liquidity? The institutional candle is just a point of interest. So understand that the reason why they are called points of interest is because they call your attention. There are literally points of interest, points that are interesting for you to watch, points that you do not want to miss out on. So what I always like to do, I like to go ahead and add alerts. As you can see, I have an alert on EuroCAD. I can probably go over EuroCAD later today. But you can see I have GBCAD looking for selling positions. I'm already buying from down over here. I'm already in buying positions from down over here. And I'll show you guys my entry so that way you guys can see how it is that I entered on lower time frame. But I'll show you guys towards the end. Okay, I'm gonna go ahead and finish this real quick. We're already wrapping up. I just want to go ahead and show you guys a little bit more. So over here, we have an institutional account as well. Now, as you can see, market has, well, it's barely created some type of liquidity right here. So this could be tapped way in the future, right? We're not nowhere close to this. But let's say we come down to our imbalance zone. From here, then it can potentially lead us back up to the institutional candle, right? So you're pretty much putting the pieces together. Accumulation, institutional imbalance, accumulation, institutional imbalance, imbalance, institutional accumulation, back and forth, so on and so on, right? They work very hand in hand. Okay, so and then from there you're gonna go ahead and see, your accumulation zones, your distribution zones, like this right here. This was distribution, this was accumulation, and so on and so on. That's when you get more detailed on understanding how to identify the whole schematics. That's going into schematics, which is a topic that we'll be talking later on in the future. But right now, what I want you guys to focus on is these imbalance zones. Look how it is that these imbalance zones are more likely to be fulfilled. Now, what do you guys see over here? That institutional candle, right? Now, what are we looking for? The entry between the start of it and half point. So that would be start of it, and then you go half point. Half point would have been right here. So you would have those entries, right? Now, what did the market do? When the market went up, look at this right here, created imbalance. That would have been your first target. So right here, what you could have gone ahead and do, let's say your entry, your stop loss, and your first take profit, that imbalance zone, 50% of it, you're already at a 3-to-1 risk reward. If you go to the second entry that you would have had, where your stop loss would have been shorter and your take profit would have been longer, so that would have been a 5-to-1 risk reward. By just being able to identify these areas, this right here would have been institutional candle. Now over here, you have accumulation of price. What I like to look at is the 50% of the accumulation of price. You see how market went down, tapped into accumulation price, and then dropped again? Where did this accumulation price drop into? Well, you can see that the market was trying to make some type of imbalance over here. Fulfilled it. So now also, what did the market create over here? Imbalance. Look at what the market does. Comes down, fulfills it, and instead back up. What did the market create right here? Imbalance. Okay, so that's a target. As you can see, fulfills it. And again, what did the market create over here? Imbalance. Let's see. Comes down, fulfills it. And you see what happens right when it fulfills it? And this happens on all the other ones I showed you guys. Fulfills it, instant reaction to the upside or downside, and so on and so on. So it likes to fulfill the areas. It likes to fulfill the zones. So what you're saying is based on candlesticks, it may reverse now to reach the liquidity there. Do you do live trade? Yes, I do live trade for the study. So live trade I do with on Tuesdays and Thursdays. So I'm doing lessons and then live trading Tuesday and Thursdays on study. How do I know my point of interest is valid? So that's gonna be a totally different topic. That's gonna be a different session on validating points of interest. Are institutional candles order blocks? No, there's a very difference between institutional candle and order block. So how do I put this? There's very I'll talk about order blocks some other time, but for now I don't want to talk about order blocks. And just because one, yeah, that'll be a totally different topic. For now, it's just these areas, accumulation price. Hold on, can you explain why you would enter where you did? I will talk about the entries later today. Possible re-entry on GBCAD. So I'm not live trading right now. Okay, we're going over lessons. I want you guys to learn before you earn. Okay, because if you want to be able to trade live, I do go ahead and do that on stage. But right now, I want to focus on the educational standpoint, so that way you guys can understand and do this, throughout the time. Because understand, give a man a fish and he'll eat for a day. Teach a man how to fish and he'll eat for a lifetime. Okay. So when it comes to these areas, we have institutional candles, imbalance, and accumulation zones. Those are the points of interest that I look at. Okay. Now, how to validate them, it's going to be very different. That's going to be a different session, which I recommend you guys to jump on the different session. So with that said, that's going to be when it comes to the whole point of interest that we were going over today. I'm going to go ahead and break down real quick before ending the session. I'm going to break down real quick TEP CAD on how I entered, and then answer some of your questions. So you guys have some questions right now. Go ahead and write them down. I'll go ahead and answer them as we go. Answer the ones that we can, and if there's sessions that I'll be doing in the future, then those are going to have to wait for those sessions. So that way you guys can go ahead and jump on those and learn in depth what it is that your question was. Is accumulation price candles always 3 candles, or can it be more? It can always be more. Accumulation price can always be more. For example, when it comes to this over here, right here you have accumulation price. This is accumulation price right there. Okay. Now when it comes to accumulation price, there's a lesson in depth that I've gone through. It's in study platform on the favorite section within my sessions. So you can go on the favorites in my sessions on study, and you'll be able to see a lesson that's called accumulation or price. Today there is a CAD news. How do you think it's going to affect the pairs? Great. Okay, awesome. All right, so let me go ahead and talk about GEP CAD, right? I'm going to go ahead and break it down as far as why it is I decided to enter what I entered. So once you go to this whole, you have institutional counters, accumulation zones, you have imbalance zones, and then you have expansion moves. Okay, so an expansion move, this is going to be a different topic that I'll go on later on. I'm actually going to go over expansion moves tomorrow in the study session. So this is going to be an expansion move, and like I said, I'm going to go in specific about an expansion move tomorrow on the study platform, go live. So I was able to identify this expansion move, and we can clearly see that this expansion move is going to be an area where I'm going to tend to look for potential opportunities on lower time frames. So I'm going to tend to look for the schematics on lower time frames, and that's why I always do boxes, because I like to go ahead and actually focus within those boxes and see those accumulation zones. So for now, I was able to identify accumulation or price. Here we have accumulation or price, and like I said, you can go in depth as far as accumulation or price within the study platform on my sessions on the favorites section. When we did that, we saw market come down. Before it went down, it created me equal lows. Came down, tapped that 50% and rejected. Now as I can see, it rejected, but it did not overcome my equal highs. Therefore, I knew that market was going to go ahead and do another push to the downside. That's exactly what it did. So I decided to go on lower time frame since it was going to go on a little bit deeper, and it's going to have to be a little bit more precise. Now when I went on lower time frame, what ended up happening is that I was identifying myself on what was going to happen over here. And I'm going to go ahead and delete this one. No longer need it. Now I'm focusing over here. I was looking for some type of divergence, and that's what I was able to identify. Now I'm not going to talk about the settings and divergence. That's going to be something that's going to be revealed. I haven't revealed it yet to anybody. That's going to be something I'll reveal later in the future within the study platform. What's the highest time frame I go to, depending what type of trade I want to look. If I want to look for position trade, I do the daily and weekly. If I want to do a long swing trade, I do 4 hour and daily. Just depends what is that you want to look at it. Okay, so yeah, so currently there's updates right now on the study platform. Okay, so if you don't see any markers on it, there's updates happening right now. Go to the pip talk, and then you'll more than likely see those breakdowns from the person who sent out the trade. So right here, like I said, I was mentioning, I was looking for divergence. That's why I was able to identify. Once I identified divergence, I tried to go ahead and say, you know what, let's go to lower time frames, 8M1, and start to look for those schematics. And that's exactly what I found. I found 1, it's within my zone. 2, we have these areas that had created liquidity, which was one of my you know, you could say my checklist. And then we have this right here, which took liquidity. Understand that this is now a potential point of interest. Now, when I saw market surpass these equal highs, it verified that this right here is a valid point of interest. Therefore, my entry will go ahead and be over here. And since that entry is placed right there, you know, what could this lead us to? Stop loss to underneath that area, which leads us to about 3 pips. And then our first take profit, because we always want to be able to understand first take profits, you know, break even, so on and so on. First take profit is going to be those equal highs. So right now, those equal highs is going to be the area where liquidity could be created, which is right here. So first take profit would have been right here, meaning that would lead us to a 3-to-1 risk reward. When it comes to that 3-to-1 risk reward, as soon as I see 3-to-1 risk reward, what I do, I immediately go ahead and move this to break even. So right now, my trade is running risk free. Okay, my trade is running risk free right now. Now I'm going to show you guys where I'm going to take this up to. As you can see, right now, where we're at. Right now, we're currently up over here. So far right now, this trade is running at a 11-to-1 risk reward, meaning I risk 1% to gain 11%. And this entry was based off of the 1 minute. Now, when you go to bigger time frames like the M5, we're going to look at, okay, you know what happened right here? Perfect. It came to this area, creating liquidity. It's coming back down. Where is it going to come back down to? Is it going to come back down to my accumulation or price? Or is it going to come back down to my expansion move? Right? Which one is it going to be? So if it comes to my accumulation or price, perfect. If it comes to my expansion move, then okay. If it comes to my expansion move, then more than likely, I'm going to go ahead and take more trades with a good risk reward. If it comes to this area, also potentially another trade, depending on how I see market moving. But if I do take a trade on this one, that means that when market comes back up, I expect it to come above these areas. So right now, so far, it's playing at an 11 to 1 risk reward. My next target after this is going to be this next equal high, which is going to be a 21 risk reward, and so on and so on. And this is going to lead us, if I decide to pull it up all the way to my H4 time frame, the area that I'm looking to actually look for my selling positions. Okay, if I am patient enough to take it all the way up over there, I'm going to show you guys what this risk reward is, and show you guys that this is very, very possible. This risk reward, taking it all the way to your final take profit, which would be your entry later on in the future, what would this lead you to? This will lead you to a 93 to 1 risk reward. Meaning you're risking 1% to gain 93%. In one trade, you can go ahead and flip your account pretty much, right? And this is when you go very, very imprecise. Their market is definitely going to go ahead and go to these areas. Why? You have the imbalance zone and you have the liquidity. So if I want to go ahead and take it safe, I'd go ahead and do the 50% around this area and leave it at an 80 to 1 risk reward. I'm fine with the 80% growth with one trade. Risk only 1%, running risk free. Right now, this trade is running risk free. And as I showed you guys, how did I base my entry? The 1 minute identifying, and so on and so on. So 80 to 1 risk reward. It's going to be a great risk reward. I'm really looking forward to this trade. Right now, currently running at risk free. We'll see how far this can go. Okay, so with that said, I hope you guys were able to learn something new the day today. Hope you guys were able to take notes on point of interest. Hope I can go ahead and see you guys on the next session. And if you want to go ahead and see more in depth, definitely in the study session where I'm going to go ahead and continue with the next session. So with that said, this is the end of the day of today. I'll see you guys in the next one. You guys have a fantastic day, fantastic morning, fabulous afternoon, wherever it is that you are in the world. See you guys next time. Too long.